Sidhant Sibal is joining us. Sidhant, let's talk about the reasons first. Do you think we're just seeing a pre-Diwali rally or fundamentals at play here for this record that we're seeing on the Sensex?
Priyanka, first of all, happy Dhanteras. On the markets, it's a Diwali before Diwali. Primarily, the main reasons for this rally is the FII's inflows. Of course, domestic factors include the RBI, which has cut the MSF rate, which will ease liquidity. Other factors, domestic factors, include the core data numbers, which came out late last evening, which were like up by 8%, which actually gives a trend the fact that the economy is bottoming out. So there is domestic use, positive domestic use, and also positive global factors, given the fact that the Federal Reserve has said that the liquidity, it will continue with its bond buying stimulus, and it's expected to continue till the first or the second month of the next year. But another negative factor is the fact that this rally is primarily led by FIIs. No, domestic retailers are not participating that much. So it's like a champagne without the fizz. So we can expect the rally to continue, especially on the Murat Day, which is going to happen on Diwali Day at 6 p.m. on Sunday.
Yes, Sidhant, but when we look at primarily FII money, which is flowing in the markets, one big concern we've seen for FII has been inflation. Now, the RBI, when it did cut the MSF, it also hiked the repo rate and talked about inflation being a cause of concern. Also lowered its GDP forecast, but we're clearly seeing that these factors not in play here, because even on that day, the Sensex went up.
Well, of course, now FIIs are basically investing in India because there are no negative cues. Whatever expected bad things were to happen have gone past. The RBI policy was on expected lines. The numbers, the data which is coming out is showing the fact that the Indian economy has bottomed out. Come November, today is 1st of November, and also the opening of new series, there are no major cues for this month at least, because the next RBI policy is going to come on 18th of December. So the bad thing is over. The bad news is over. There is no good news, but the bad news is over. That is why the rally is continuing, and the FIIs are continuing to pour money into the markets.
Sidhant, very quickly also tell us about the sectors that are moving at this point, the interest rate sensitives, how are they doing?
Well, the rally is led by sectors like IT, metal, banking and auto. And of course, it's led by banking. And today's the major gainer is SBI, which is up by around 2%. Yesterday, a number of banks came out with their Q2 results, and the key news point of the number was the fact that the NPAs of these banks are reducing, and this is a positive outcome in two ways, because it shows the fact that the health of the banks is improving, and also that the economy has bottomed out. So the rally is by and large a secular rally, but the key sectors which one can watch is banking, IT, metals.
Sidhant, also the news of the day, the rupee is weakening against the dollar. Any reasons for that, looking at how the Sensex has been performing? Why is the rupee weakening now?
Well, it's the month-end demand from the exporters and the importers that is the primary cause that the rupee is weakening against the dollar. Yesterday also it weakened against the dollar. We can expect this to continue, but let's hope for the best.
Yeah, we will be hoping for the best. Sidhant, very quickly, did you speak to some experts? Any advice that the experts have given for investors out there, particularly domestic investors, like you said, who are not participating in the rally? Should they sit on the sidelines and wait, looking at the Sensex, which is touching record highs?
Well, of course, experts believe that the banking sector is the sector which one should watch for, and also the IT sector, given the fact that the IT sector also came up with good numbers. So these are the two sectors, and experts are betting on that. By and large, the rally is expected to continue. But another key point which 2 points which I came across while researching, that in October the markets rallied by 9.2%, which is highest since 2012 rally, and also the fact that despite the fact that the markets are at an all-time high, none of the stocks are at an all-time high. So that's another two main points.
Yes, very interesting. Thanks, Sidhant Sibal, for joining us with that and explaining the rally in the